Hello, everyone. This is Mohammed Akif with Akif CPA. And then today we'll be discussing the conversion of a LLC to S Corp or making that election. I want to get into detail how the election works. I want to get into detail why this is as an option, not a mandatory thing. And then I want to help you understand the best time to make that S Corp election or to do the conversion from the LLC to the S Corp. So let's get into it. If so whenever you start, I get this so many emails, so many leads, in terms of, you know what, Mohammed, I started a new business, I set up a LLC, I want to be S Corp. And then this is the first thing that they're saying to me. I said, and then I go, okay, why do you want to be S Corp? uh, some of them will say, oh, my accountant told me, or my other accountant that I was working with told me, or my lawyer told me, that who set up the LLC, or I'm in a group, I'm in a Facebook group, I read online, and then everyone's talking about, hey, you should have this as a S corp. Make sure you have it as an S corp. I said, okay. I mean, so tell me more about your business. Tell me what is going on. Tell me in terms of the revenue. Tell me in terms of investment. Tell me, how do you see the business growing? And these are the questions that I normally go with, and then I'll be going with this with you guys today too. So let's say, I know that there are a lot of people that say, I want to be S corp right away. I want to be S corp right away. So when does it make sense? It makes sense when you know the revenue will be coming in right away. This is my first thing. So let's say if you have a contract lined up, you know for sure, as soon as I next month I signed up this contract, I do the work and the money is my contract dictates the money will come in. No problem. You know that you already talked to someone, you're getting into a subcontract, the money's going to come in. Or any type of business where you know that you have to set up a LLC in order to get that contract, in order to get that job, in order to get that work. So you already know for sure that next month I'm getting 10,000, 15,000, 5,000, 3,000. No number doesn't matter. I am getting that money. What if you're starting brand new? What if you have an idea? What if you have something unique, and you're starting brand new? You're And then you don't know how the next month is going to be. You don't know how the next quarter is going to be. You don't know how this year is going to be. So does that, in that situation, does the S corp election or the election option make sense for you or not? And this is what I'll be discussing today. I want you to understand how this works. I want you to understand when is the best time to make this election. And in some cases, S corp doesn't need to be right away. And let's get into the detail how why I'm saying this, and then for you to understand what exactly is happening on the back end, for you to make that judgment call, for you to make that business decision call, and then say, okay, you know what, I'm going to wait, or you know what, I want it now. The S corp election. So let's say when you're starting brand new, you're making investments. This is a brand new business, new idea, or it is something existing, but you're getting to new. You don't know how the revenue is going to come in. You're putting all this money, for equipment, for vehicle, for machinery, for furniture. You're hiring employees. You are doing everything from top to bottom to get that business up and running. So for legal purposes, you're done the right thing. You got the LLC, perfect. This is the best thing you can do for yourself in terms of legal. Now, for tax purposes, how does it work? I mean, so you are making that investment. You know, a lot of it will be deductible. There are so many expenses that you will be able to deduct. And then, so at that point, does that make sense to be S corp? At that point, when you're starting brand new, there will be a lot of, and you don't know the income. You don't know how the revenue is going to be. You don't know how this is going to play out this year. You don't know how it's going to play out next year. You're hoping this plays out well. You're hoping that you get revenue. You're hoping that you make that money that you're looking to make. But you don't know for sure, right? This is uncertainty. You don't know. So in that case, does S corp make sense right away, or does it not? So when you start brand new, you're LLC 100% owner. You are considered a disregarded entity for tax purposes. And then what do I mean by disregarded entity? So technically, for legal purposes, you as an owner, which you are 100% of that LLC, are separate from the LLC. So legally, you are a separate entity, both of you. But for tax purposes, what the IRS is saying is that no, for tax purposes, you guys are one. And then so what that means is that within your 1040, within your form 1040 that you file, you will file a form Schedule C for that LLC. And now I'm going to point out why in a lot of cases it does not make sense to have the S corp election right away. So for instance, let's say you're making that investment, right? I mean, now you don't know how this is going to play out. Again, uncertainty plays a big role in this. Again, we are hopeful, but uncertainty is still there. We don't know how the revenue is going to be. We don't know how the business cycle is going to be. It could be up one day, 1 month, and could be down the next month. And you're starting something brand new, new idea, new top, a new investment. So these are a lot of things that we have a lot of uncertainty around it. So in a case where you are 100% owner, by default you'll be considered a disregarded entity. So again, Schedule C within the 1040. That's what you're filing. So all the investments that you're making will be deductible. Let's say, for example, you buy furniture. We will have depreciation. You have office expenses, again deductible. You'll be paying employees, deductible. So and then you'll be doing other investments. The majority of it will be deductible. Some in cases of through depreciation, through some of it will be through amortization, but you will get the deduction. So when you are Schedule C, when you make that investment, you are getting the deductions. You are taking the benefit of that loss. So if you have income coming from other places, or you have just losses from your business, you will be able to offset any other income, any other taxable income that you have. So because you are actively working, so you will be able to deduct those losses. So let's say if you were a brand new business, you invested $50,000, which could be a combination of furniture, employees, rent, you name it. And then you make up, yeah, and then your revenue was in 1 year, your revenue was 20,000, right? So for example, we come up with 30,000 in expenses and deductions. So now you're in a loss of 10,000. You'll be able to deduct that 10,000 loss on your Schedule C. So now, for instance, this is helping you personally in terms of tax wise, taking the deduction on that 10,000. Now let's switch it and then talk about the same investment, 50,000, and you were a S corp to start off with, right? So the whole point. So now you have invested the money. You will still get the deduction on that 10,000. You will still get it through the S corp. S corp will be filing its own return, and you'll be getting the losses because you have put money into it. So, but now with the S corp, let's say if this company was the S corp, what other things will come with it? First of all, you need to file a separate return. That means that you need to hire an accountant. Majority cases you cannot prepare your own S corp returns. That means more money to the accountant. Secondly, we have reasonable compensation that you need to meet. There's certain rules for the S corp. You got to have compliance. You got to have compliance when you do the S corp. S corp is an option, but once you do elect that option, there are compliance issues with it. Separate books, separate tax return, right? Reasonable compensation, making sure that everything is in order. And then you cannot file your personal return until the S corporation files its own return, because you get a K1 from that S corp to report it on your 1040. Until you get the K1, you cannot prepare your 1040. So the idea is that when you're starting brand new, when you're making the investment, you want your taxes to be simple, manageable, and then at the same time be able to understand what is happening, right? So you want your expenses to be low as possible too, because you're making other investments. So you want that site to be really relatively easy to manage, relatively simple to navigate through, and at the same time be less costly. You don't want to put money more into it. So let's say in a case, again, I'll go back to the example that we were talking about, 50,000 in investment. If you were Schedule C within 1040, comparison to a score return, simple return, you were able to get the deducted. The 1040 has been, you have seen it many, many times. So you understand it much easier. You know how this is working. And then it's easy to manage. That's number one thing. So being a Schedule C LLC for a new business, when we're making investment, when you're starting brand new, it makes sense because you want to keep yourself easy. You want to keep your taxes manageable, and at the same time lower your cost. That's one thing. Number two, let's talk about what is S corp. I mean, what is it doing to you? The whole purpose of S corp having the election is for tax savings. The number one reason is for tax savings. Legally, you have done your job. You got the LLC. You are protected. You're protecting the LLC assets. But for having the S corp, the whole purpose is tax savings because you're changing the type of income that you're earning from that LLC. But if you don't have any income and they're just losses, then what's the point of having the S corp? And then you know that you'll be having losses for 1, 2, or 3 years. Let's say even 2 years. Then what's the point of having an S corp early on when you know you'll be incurring losses? When you know that the revenue will be up and down. You don't know how this is going to play out. You're ready to make that investment. You're ready to take that risk, but you want to keep things simple, manageable. You want to focus on your business. You don't have to worry about. You don't want to worry about taxes. You don't want to worry about, okay, how this. Oh my God, I have to get in a CPA. I have to get a tax accountant. I have to get somebody to help me with the return. And until that is done, I cannot do my personal return. So the point of having S corp election is to save taxes on the income that you're earning. But if you know for sure for 1 or 2 years you'll be not earning income or you'll be making continuous investment, you'll be in a loss situation. So the S corp won't it's not doing anything for you. It's not the only thing that you're doing is you're increasing your compliance cost. That means you're investing more time into it because you got to get the CPA. CPA is going to tell you this. Secondly, it's more to manage. You already got new employees, new ideas, new business cycle. You got new internal process. You're testing so many things out. There's so many hats that you're wearing. You don't want another hat right away. You want to take it step by step as the business requires. You want to make changes as it comes. And then you know when they're coming. You can tell when they're coming because you are the one running the business. So one first thing, S corp is an option. It doesn't need to be necessarily starting right away. Number two, the whole point of having an S corp is to save taxes on the income. So if you're not earning income, you haven't earned any income, you're still in a loss situation, then what's the point of having a S corp? So these are number two things that I want you to focus on and make sure that you understand how the S corp election works, and then does your business needs it? Understand that when is the best time to make that election. So if you know for sure that the first year there will be a lot of investment, there will be a lot of expenses, I want to keep things simple. I want to keep things manageable, and I want our compliance, tax filing costs, compliance costs to be on the lower side. As a business owner, this is what I want. And then I know this election is there. So I know when, let's say in a 1 year, I hope things to turn around, bring more money in, revenue is coming in, definitely make that election. Make the election at that time, get the S Corp. And then once you're making money, I'm talking about take home money, profit, not just revenue, because you can have $1 million in revenue and you can have 1.5 in expenses. So revenue does not matter. What matters is what you take home. So when you're taking home money, do you need to pay more? That's when the S Corp comes in. So you work hard to earn that money, but you make sure that you take the most of it home legally. And then so that's one of the options that you can do. Again, the whole point of having an S corp is tax savings. Of course, you can do a lot of things with the corporation too, but the whole point is for tax savings. But you gotta earn income. You gotta have profit to have tax savings. And when business is starting brand new, you don't know. You don't know. So you want to make sure that you keep your compliance costs less. You want to make sure that things are simple for tax purposes. You want to make sure that you can manage them without thinking about them, without stressing about them, because you got 1,000 other things to stress about, what other things to worry about. So my again, back to the same questions. I want to be S corp. Why don't you get the LLC? Doesn't make sense. Doesn't make sense. Think about it. Think about it and understand that business has its own cycles. The S corp election is great. It works for a lot of people, and then it's there if you are making profit. If you initially, once you do make the S corp election, of course, we have certain rules that you need to follow. There are compliance rules. But again, when business starting new, you don't have to be a S corp right away. You don't have to make your tax complicated. You don't have to make it dependent upon, because what happens is People don't understand how this S corp works. And then when they elected right away, of course they have to find an accountant, a CPA accountant, or a tax professional, anybody. Then they have to wait for the K1 from the S corp 1120s. They have to wait for that K1 in order to do your personal return. Now you got, your refund is stuck. Or let's say if you can take that loss and apply to your other income, your refund is stuck because of the 1120s return. So don't put yourself in a position where you're stressing about other things. Keep it simple, keep it manageable, and keep the cost compliance, tax compliance cost down, and making sure that you are able to take advantage. Keep it simple. This is my 2 cents. And once you're making money, definitely, I am with you. We gotta make the S corp election. We gotta make sure that we pay the least amount of tax possible legally, right? We gotta make sure that we use those options. But until then, keep it simple. Until then, don't worry about other stuff. We are here to help you. You can find, and there's tons of material online too. You can read about it. But please consider this as an option. It's not mandatory. And secondly, the whole point of making the S corp election or to getting the S corp status is to save money on taxes. It's to save taxes. That's the whole point. So if you're in a loss and you'll be continue to be in a loss, then it's more compliance cost. It's more to manage, and it's more of a hassle. So that these are my 2 cents. So make sure you understand that when is the best time to make S corp. Yes, it is one of the best things out there. At the same time, know when it's going to work for you.